Imagine your offer gets accepted tomorrow. What actually happens next? No stress, no mystery. Today, I'm going to walk you through every step of the mortgage process so you know what to expect and don't get surprised by hidden deadlines or confusing paperwork. Hey everybody, I'm Mauricio, your mortgage expert, and I help folks get into homes without all the headaches. If you want real practical mortgage tips, no boring finance talk, tap that subscribe button. It helps me a lot and I'll keep this short and useful. Now, your very first step is getting pre-approval. This is where you go to a lender, share your income, assets, credit information, and they'll tell you how much money you can borrow. It's not the final loan, but it matters. Sellers take pre-approved buyers way more seriously. Things that you will need at pre-approval are gonna be things like pay stub, bank statements if you're self-employed, your ID, last 2-year tax returns if they ask, and bank statements to show your money for down payment. Here's a big tip. Don't make huge deposits into your account the week before. Lenders will always ask where that money came from. Step 2, which is house hunting and making offers. Now, you go shopping. Once you find the one, the agent helps you write an offer that includes your pre-approval letter, earnest money, and any contingencies like inspections, typical timeline. Seller accepts this offer, or they counter, or they reject within a few days. Here's a pro tip. Include a realistic closing date. Not too fast, not too slow. If you need a quick close, tell your lender early. Step 3. Submit your actual loan application and lock in that rate. After the offer is accepted, you're formally able to apply for the loan. This is when the lender opens a file and orders the appraisal. You also want to decide whether to lock in your interest rate at that point. Usually that means that you can freeze that interest rate for a set period, which is around 30 to 60 days, which protects you in case rates go up. If rates fall, you don't benefit unless you have a flow down option. Step 4, home inspections and repairs. I always recommend you do a home inspection. This is separate from your appraisal. The inspector looks at major problems with the house, like roof, structure, any pests. If issues show up, you can negotiate repairs or credits with the sellers. Don't skip this step. It is your best protection. Now we go into step 5, which is the appraisal and underwriting process. This is where the loan gets underwritten by the bank, where they want to make sure that the property is worth the money that you're getting borrowing from, and that you qualify for the loan. The appraisal itself, the lender orders the appraisal to confirm the home value. If that appraisal is low, you may need to negotiate that with the sellers or bring more cash to the closing table. Let's talk about the underwriting process. This is the paperwork deep dive. They verify your income, your assets, employment, and there are no surprises. Be responsive during this process. If the underwriter asks for a document like bank statements, transcripts, or letter of explanations, get it quickly or it could delay closing. Step 6, clear to close. This is when the underwriter is satisfied, you get with the clear to close. That means that the lender will fund the loan. And you'll get a closing disclosure at least 3 days before you close to make sure that all your final loan terms and closing costs are spelled out. Read this carefully and compare to your loan estimate. Step 7, your final walkthrough and closing day. A day or 2 before closing, you will do something called a walkthrough with your real estate agent to make sure that the agreed repairs are done and the property is in a state that you expected. On closing day, you will sign a stack of documents like the note, which is the promise to pay, the mortgage, and a few disclosures. Make sure that you bring your government ID with you and the funds for closing, which are usually in the form of a cashier's check or a wire. Always confirm with your title company exactly how they want the money delivered to them. And then the big step, congrats, you get the keys. A few housekeeping items, set up your mortgage payments, and auto pay is always helpful. Keep copies of all your closing documents. Budget for any ongoing costs like property taxes, home insurance, and maintenance. And if you use an escrow account, the lender usually collects these taxes and insurance on a monthly basis. Here's a quick list of things that trip buyers up. Don't change jobs or make large unexplained deposits during the process. It can freeze that underwriting. Don't buy a car or open new credit. New debt can change your debt to income ratio. Read your closing disclosure. Always check for the interest rate, the APR, all the loan terms, and all the final costs. Ask about seller credits. They can help cover some of those closing costs. If you're tight on down payment, ask about first-time buyer programs or down payment assistance in your area. If you found this helpful, do me a favor, like the video and subscribe so you don't miss the next one where I break down closing costs or show you how to compare loan estimates the smart way. If you're ready to start that pre-approval process or want me to review your situation, drop a comment or reach out. I love helping first-time home buyers make smart moves. See you on the next one.